investors be digesting this latest market action and really the volatility that we've seen?
Well, they should be embracing volatility. Volatility is the friend of the buyer of long-term value. And, we have had this massive rebound, 20% up. We really did have a bear market intraday, April 7, April 8th. We did get down more than 20% from the highs. And so hopefully investors have learned that stocks have proved rewarding over the long haul. They just have to have the patience and discipline to stick with them through thick and thin.
So there's been a lot of talk of diversification, investing overseas, looking out for opportunities. How do you identify those undervalued pockets of the market, and where are they within this current environment?
Sure. Well, it's a market of stocks and not simply a stock market. So while the major market averages are now in the black for the year, there are still many stocks that are down. Believe it or not, and the average stock in the Russell 2000 index is down significantly. So, we are a value-oriented shop at the Prudent Speculator. We look to buy things that are on sale, try to take advantage of that downside volatility. Things tend to go to extremes. Investors get infatuated with certain stocks, and then they'll, of course, abandon other companies because sometimes there are short-term issues, or they're just not in a space that investors are attracted to today. So today, we like things in the energy sector because energy stocks have been hit pretty hard. A name that I think is attractive is Civitas Resources, probably one of the hardest hit. They're an oil and gas producer. A big dividend yield, low PE. They're still very profitable even at current energy price levels. And they've been very shareholder friendly in buying back stock and paying us a giant sized dividend. Also, we've seen things like in the pharmaceutical area, a company like Merck, which we view as very high quality, trading at a PE around 11 today with a dividend yield of 4%. And, historically, Merck trades for a much higher valuation level. Happy to go through others if you'd like, or we can, I'll wait for your cue.
No, yeah, because you have 5 stocks that you like. You hit 2 out of the 5. So what are some of the other names?
Sure. Well, again, lots of things have done very well this year. We own Oracle, which has had a great day today. So when I come on the airwaves, I like to talk about things that haven't had their day in the sun. So something like Whirlpool, which is the appliance maker, there your yield is over 7%. PE is in the 9-10 range. And again, we do think that interest rates will be coming down later in the year, and that will support housing, and that a stock like Whirlpool, this is the time you want to take advantage of it before all of that has happened. Another stock that has struggled mightily is Target, the big discount retailer. Here again, you have a very low valuation relative to where it historically trades and a dividend yield that's pushing 5%. And then a final stock would be UPS, which is the package shipping company. Again, the theme here is low valuations and generous dividend yield. And in a market where the S&P 500 is trading at 23 times forward earnings, our portfolios trade at 14 times forward earnings. And then our dividend yield on our overall portfolio is 2.5% versus 1.3% for the S&P 500. So I think you can be selective in this market. I do think that stock picking is going to be much better going forward than buying the indexes. And it certainly helps us sleep better at night with reasonable valuations and generous dividend yields on our stocks.
So, John, you mentioned interest rates, and I want to talk about the Federal Reserve and what they could do in the future. We saw inflation moderating. We have jobless claims likely ticking up from this morning. Do you think the Fed is now in a position to cut rates sooner than previously expected? And do you think we'll be cutting for good news rather than bad news?
Well, that seems to be the mindset, is that we actually could get good news rate cuts as we go throughout the year. Will the Fed cut, very soon? I don't think so. I think there's obviously certainly a lot of uncertainty about tariffs and their impact, and inflation expectations in some of the surveys that have been done are still very high. But obviously the CPI and the PPI this morning being, coming in lower than expected is a positive. Even though the jobs number for the month, that was out on Friday was good, jobless claims have ticked up. So I do think the Fed is going to be in a position at some point soon to cut interest rates. But more importantly for investors, you don't need the Fed to cut interest rates. Again, historically speaking, stocks have done fine, whether the Fed is tightening or easing, whether interest rates are rising or falling, whether inflation, believe it or not, is high or low. And even, believe it or not, in terms of if we go into a recession, the historical numbers we've looked at for the 15 prior recessions we've had have seen stocks, at least value stocks, lose a couple percent on average during the recession, but nobody can time the start and end of the recession. Heck, they don't even know when it starts and ends.